Hey everyone, welcome back to Corporate Decoder, the place where we untangle the complex web of corporate finance and make it simple for everyone to understand. Today we're digging into a filing from Stone Point Credit Income Fund, and let me tell you, it involves some interesting share activity that is a bit of a departure from the usual. Before we dive in, if you love getting clear, nonsense insights from these official documents, subscribe to the channel. We also have a fantastic community over on Discord. The link is in the description below, so come join the conversation. Alright, so what we have here is a Form 8K filing. Think of this as a company's way of telling the public about major events that have happened and aren't already covered by their regular reports. It is like a breaking news alert for investors. The main story here is about the fund selling a bunch of its own common shares. They sold over 140,000 shares and the price for each share was about $24.88. This all happened pretty recently, with the final numbers being locked in on the 16th of December 2025. In total, they brought in a cool $3.5 million from these sales. Now, this is where it gets a little technical, but what it means is that these sales are what we call an exempt offering. They're not selling these shares out in the open to just anyone. Instead, they're using specific rules to make sure they don't have to go through the whole big registration process with the government. This usually means they're selling to a select group of investors, not the general public. Think of it like a private club versus a public concert. And to really nail that point home, the filing explicitly states they did not advertise or try to get the general public interested in buying these shares. This reinforces that it was a private sale. A key part of this private sale is something called an accredited investor. The fund made sure that everyone buying these shares met the definition of an accredited investor, which generally means they're financially sophisticated or wealthy enough to handle the risks of investing in private deals. They relied on the buyers themselves to confirm they fit this description through legal agreements. This is Stone Point Credit Income Fund, and this filing focuses on their specific activity of selling these shares. The report itself is dated the 22nd of December 2025, just a few days after the final share numbers were determined, and it is signed off by Stephen P. Henke, who holds the title of Chief Financial Officer. This shows that a top executive has reviewed and approved the information being reported. So what does this all mean for Stone Point Credit Income Fund? Well, they've raised $3.5 million by selling more of their own stock. This is a pretty common way for companies to get cash. However, the detail that they're doing this as an exempt offering and not publicly suggests they're targeting specific larger investors. This could be to avoid diluting their ownership among a huge number of small shareholders. Or perhaps it is a way to bring in strategic partners or investors who have a deeper understanding of the fund's specific investment strategy. The fact that they're ensuring buyers are accredited investors also aligns with the idea of dealing with more sophisticated market players. Looking at this, the strategy seems to be about targeted capital raising rather than a broad public offering. This can be a sign of confidence from the management that they have a specific use for this capital and know exactly who they want on board as investors. It is not necessarily good or bad on its own, but it paints a picture of a more private controlled approach to growth. Now, what is my take on this? For a fund like Stone Point Credit Income Fund, raising capital through private placements is a standard practice. The strength here lies in their ability to attract these accredited investors, which suggests the fund is viewed positively by those with more capital to deploy. A potential weakness, or something to watch, would be if this becomes their primary or only method of growth, as it limits the pool of potential investors over time. The opportunity is clear. This capital injection can fuel further investment strategies. The risk is minimal from a regulatory standpoint since they're following exempted offering rules, but it is always about ensuring the investors brought in are aligned with the fund's long-term vision. Alright, that is our breakdown of this Stone Point Credit Income Fund filing. What are your thoughts on this type of offering? Do you think it is a smart move for funds to raise money this way? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more. And don't forget to join our Discord community for deeper discussions. Thanks for watching, and we'll see you in the next one.